All right, let's see here. First time on YouTube Live. Let's go. Okay, let me actually record on my let's see here, Zoom. Okay. I guess I'm recording on Zoom. All right. Oh, no, actually, let me go and record this as well.
Recording in progress.
Awesome. Okay. Let's go ahead and get this started. I don't know if you guys can see my screen on YouTube. Bear with me, guys. This is my first time working this on YouTube. I'm trying to see how I can share my screen on YouTube. There you go. Share screen. Okay. Grant access application. Okay, I hope you guys can see this on YouTube. All right. All right, let me see. Yeah, you guys are good. You guys can see this. Awesome, awesome. Okay, we're good to go then. We are good to go. Awesome. Let me see if I can. So, okay, we're good then. Okay, I'll figure that out later. Welcome, guys, to Chart Work Wednesdays. I'm so grateful that I'm able to host these calls, man. Like, when I started these calls, you know, shoot, what I've been doing chart work calls for over a couple of years now, like two years or so. And It's been amazing. And it all began as an idea. I decided to teach my students, teach everyone about the skill set of trading. And anyways, long story short, this skill set has impacted my life, and I know that it works, and it's proven data, proven results, and it takes time, dedication to learn the skill set. Now, today, I know Monday I spoke about fundamentals, I spoke about mindset, and set up the intentions for this relaunch, set the expectations, and I will be posting a trailer video on my channel soon, and pretty much explaining the whole purpose behind this channel. I'm relaunching, uh, this channel, of course, and I'm excited. And now today, we're gonna go over some chart work, and going over some technical analysis, seeing what's happening in the markets right now. We're going to be looking at different pairs, and I'm right now I'm looking at forex, some forex pairs, Euro USD. I look at USD JPY, and of course I look at the dollar just to monitor how everything's going with the dollar. So right now, Euro USD, this is actually the platform that I use for trading. It's called TradingView. I'm not affiliated with TradingView or anything like that. There are so many other trading platforms out there, but the one that works for me that I've used is TradingView. So here, this is where I do my analysis, my breakdowns, my markups, back testing, and top-down analysis. So definitely use a platform that works for you, that you can do your markups. For me, preferably, I like TradingView. I can, it's very clean, up to date, and I'm able to also take market orders. I'm able to take buy and sell orders on here, market executions. I can connect my broker to TradingView. There's so many brokers that you can connect to TradingView, and you can take trades on TradingView without having to use the trading platform from your broker. You can actually just, and there's certain brokers that you can connect to TradingView. Um, so, anyways, let's go ahead and see what's happening right now. So Euro USD, as we can see, it's been on an uptrend. It came down, it downtrended right here. A temporary pullback, a correction, and it hit this level here. It hit this level here, the support area. There's price action going on. And for my beginners, for my people that are just tuning in, for people that is their first month of trading, first day of trading, or first year of trading, I will do my best to make it simple for you guys. I'll do my best to guide you guys and show you guys what has worked for me, and stuff that I wish I would have known my first year, my first day back then. Because when I first got introduced to trading, I didn't have a proper mentor to guide me. I didn't have a proper way to study the markets, or I was relying on videos, on events, seminars, reading books. Right, I that's how I learned how to trade, and through watching videos and stuff. Um, so I didn't have a one-on-one mentor to teach me. Right. Yes, there were some. However, there were some people that did guide me, that did uh, show me, you know, different strategies and stuff on a group setting, right? But really, I didn't have anyone to guide me one on one, right? So I had to learn that myself. So through practice and repetition and study, I've been able to learn the skill and train my eyes, and learn how these markets move, and the price movement, the price direction, the change of price, the price action, break and retest, all of these concepts I have been able to learn over the years. And I have over 5 years of trading, okay? And I'm still learning to this day. Now, whatever I show here, it applies to every asset pair. It applies to every market, whether it's a crypto market, stock market, forex, indices, whatever pair, commodities. The concept that I go over, it applies to any market. Okay, so I just want to make that clear. And for my people that are looking this and looking at, oh man, there's a bunch of lines, right? Colors, there's a lot going on, right? And I understand that. And I don't expect you guys to get it down the first day. I don't expect you guys to have it all figured out. It takes time. So as the more you watch these videos, the more you study, the more time you take to go over this information, one day it's all going to make sense. It's going to click. You're going to have that aha moment, that breakthrough moment where everything's going to make sense, and then you're going to just go through flow state, right? You're just going to it's going to become second nature to you. So yes, it may seem overwhelming at first, it may seem a lot at first, but trust me, just take it day by day, rewatch these videos, continue to plug in, and do your best to commit and to dedicate to this skill set. Now, today I just relaunched this, YouTube channel. So today is the first day for Chart Work Wednesdays. Now, I will be doing some analysis. I will be doing some markups here, and I will explain what it means along the way. Okay, I will explain what it means because I don't want to. I want to do less talking and more showing. And in the midst of all that, I will explain what it means, and I will do my best to explain and break it down for you guys as I go, as we go. Okay, so let's go ahead and get this started here, because I do want to focus and take my time here. All right, and so for my people that are watching this, I'm actually refining a strategy. I'm working on a strategy. It's called the playbook, and it's a 7-step blueprint. Okay, to guide you on how to implement this skill and a direction for all my people. And this applies to every market. Okay. So that's called the playbook. Now, make sure to take a screenshot of this, to write it down. When I do my technicals, when I do my analysis here, I'm going to apply these 7 steps. Okay. And it is duplicatable as well. Now, make sure to write this down and to take note of this, because as I go along, I will be applying these steps. And these are the steps that will guide you on how to mark up, how to do your analysis, what to look for. And it may look simple, right? It may look, oh, it's a short list, but no, there's a lot more into this play plan, this playbook, because there's steps. For each step, there are subtopics, right? There's like there are steps underneath those steps. Does that make sense? So, for example, the first step, there are some steps for step 1, right? And there for the second rule, there's some steps for that second rule. For that the third rule, there's some steps. So each rule has their own respective steps. And so it may seem okay, it's not only just 7 rules, but there's more steps added to it. Okay, and I'll explain that as I go along. Now, let's go ahead and look at Euro USD. Euro USD, I looked at, when I look at every pair, when I'm on the markets here, and when I do my technicals, I look at price direction. I look at where the momentum is going, the overall momentum. So the overall momentum of this pair, Euro USD, is on an uptrend because we have higher highs and higher lows. So we have a lower low here, higher high here, higher low, higher high, higher low, higher high. So when you see higher highs and higher lows, that indicates that the pair is on an uptrend. The market is on an uptrend. So higher highs and higher lows are pivot points where price changes direction. Boom. Okay. Let me actually use this instead. What is there you go. So it's like a wave, right? It's a wave that's going to the upside. Now, when you see a pattern like this, you're looking for buys, right? It's on an uptrend. It's on a buy. There's buyers, okay? Buyers dominance. We may and as we go to the upside, there are going to be some temporary pullbacks, aka corrections, which means that what goes up must come down. So what goes up will go down, as you can see here. So we have, let's look at here. So we have a lower low here. It went up and then it went down. Okay. It went up and then it went down. So that's called a correction. This right here is called a correction. 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 Green candles indicates bullish, meaning buy. Red candles indicate bearish, meaning sell. Correction here, correction here. So that's how you read this. I know this is not the best explanation. I hope you guys are understanding as I go along here. But trust me, just give it time and it'll make sense. So here, now that we look, this was all past data. Okay, all this was past information. And you have to look left to be right. Okay, so you have to look what happened before with price to predict what's going to happen in the future. So because we have no idea what's going to happen here, okay, anything can happen. We have no data to support. We don't have enough information on what's going to happen in the future. So the only information we have as traders is looking what happened, to see what happened in the past, to see what happened in history. So that's why we look at what happened here, what happened here. And the markets will tell a story. Now that we look at where price is currently at, which is at, this is the price right here on the right side, 1.17392 is your price. And I'm on the 4-hour right now. Okay. So I have different time frames here. 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, monthly, 3 months, 6 months, 12 months. See, so these are the time frames. And for each candle, these are called candles. For each candle, it indicates, for example, for this time frame, the 4 hours, this candle represents 4 hours. Each candle represents 4 hours. So right now we have 1 hour and 37 minutes left on this candle, on this bullish candle. But the one before that completed the 4 hours, and the one before that, and the one before that. So each candle represents 4 hours for this time frame. This one represents 1 hour. So each candle represents 1 hour. And then each candle represents 30 minutes for this one, and then so forth, 15 minutes, 5 minutes. So each candle represents 5 minutes, and this one's 1 minute. Now, I like to look at the 4-hour for price direction. That's why I have it marked up here, listed under the playbook, 4 hours, step 1, 4-hour market direction. So to look at the market direction, I look at the 4-hour time frame. Look at the 4-hour for market direction. So right now we see price here, and I will explain my drawings here. So just bear with me. Now I'm going step by step. Okay, so first look at market direction at the 4-hour. Now that we know we have higher highs and higher lows. To indicate market direction, you want to look at higher highs and higher lows, or lower lows and lower highs. So here is a lower low. I'm going to abbreviate it LL. Higher high. Lower low. LL. Higher high. Lower low. Higher high. And then so forth, okay? You can label it like this, doesn't matter, or you can circle it, okay? And how you can tell it's a higher high and higher low, when you see price here, okay? So let's say this price, this lower low was at around approximately 1.10765 here. This is a lower low because it was the lowest price before changing direction to a higher high. I'm sorry, this is actually higher low. Let me see. This is a higher low. This is a higher low because this price is higher than this price, right? This higher low, it's higher than this higher low. This higher low, I'm explaining like this better. This higher low is higher than this price. This price, and you don't have to label every single one of them. You don't have to label every, this is just an explanation, okay? So this higher low is higher than this higher low. And this price is higher than this higher low. And this price is higher than this higher low price. And then this higher low is lower than this lower low. So when you're looking for an uptrend, you're looking for higher lows and higher highs. Higher highs are at the top here. Higher highs. Because this higher high, it's higher than this previous higher high. This higher high, it's higher than this higher high. This higher high, it's higher than this previous higher high. And then we can continue on here. This higher high, it's higher, right? This is the highest one. This higher high is higher than this previous higher high. And this higher low, it's higher than this previous higher low. So this trend, it's on the uptrend. It's still on the uptrend. Why? Because it has never broken below this higher low. We had a temporary pullback, a correction. We had a correction here to respect this support, which I'm going to talk about on the second step. So we are still on a uptrend, and we are looking to see if this price, this current price here, will go above and surpass this higher high to continue the uptrend. Boom, 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 boom. So we have to break above this area here to continue the uptrend, to continue the higher highs, and then higher low, etc. And how do we know that this price is a higher high? Or, how can you indicate these pivot points, these higher highs and higher lows? A pivot point is simply every time when price changes direction. And there's a time where price will push down, and then all of a sudden will push back up. So this right here was a price direction, because there was a bearish candle, a sell going on, and then after this bearish candle resulted a bullish candle, resulting a price direction, a price change direction. So like it happened here, we had 3 consecutive sell candles, and then all of a sudden after this last red candle resulted a bullish candle, a green candle. So it changed direction and went down and then up. And that right there, it's a pivot point. So each time there's a pivot point, it is also a way to indicate lower lows and higher highs, or higher highs and higher lows. And how you can tell that this is a higher low, because this low is higher than this previous low. This was the lowest price. And we're looking at this section here. Does not matter what happened. Does not matter what happened here. Okay, it's the same concept applies to a bearish, to a downtrend or an uptrend. So we're looking at this section here. Okay, now this was the lowest price, lower low, because there was a lower low did not continue after this lower low. Does that make sense? The price did not continue downtrending. So that is why this was the lowest price. This is the lower low, because it did not continue to downtrend. It changed price direction. So look from lower low to higher low. And when you're looking at an uptrend, this is how you notice it. When you have higher highs and higher lows equals uptrend. Higher highs, higher lows equals uptrend. So I can put it here too. Higher highs, higher lows equals uptrend. Lower lows, lower highs equals downtrend. So when you have higher highs and higher lows, that equals uptrend, meaning you're looking for buys. Buys, only buys, because you want to go with the momentum of price. You have to go with the trend, go with the wave. Do not go against the trend. Do not trade against the trend. Trade with the trend. Downtrend equals downtrend indicates sells. Look for sells. So now that we have that, now that we know the trend's on an uptrend, let's see, for example, this area here was a temporary pullback, but we can look at it. We can notice some lower lows and lower highs here. All right. So let's look at this. Actually, I'm gonna pick a better one. You can look when you back test, we can look at this here. So here you will see lower lows and lower highs happening. So here we have a higher high. When price changes direction, higher high to now a lower high. When price goes from higher high to lower high, that's when you know is on a downtrend, lower low. And you don't have to mark every single one. You don't have to list every single pivot point. Just list the ones that are very easy, noticeable, lower low, lower high, lower low. So we can see here, we have a downtrend that's happening here. So here you look for sells. Boom, boom. So this price this lower high is lower than this previous higher high, right? This low, this price is lower than this previous low. Right, this is a lower low here. This low, it's lower than this previous low. So that's why it's called a lower low. Lower than the previous low. This low is lower than this previous low. You see? See here. Boom. So you can see here that price continues to decrease. On the right side, you see price decreasing. This low was at approximately 1.09417. this price was approximately 1.07819. So this price is lower than this price. So that's why it's called a lower low. Same thing with lower high. This high is lower than this previous high. Lower high. You guys are getting it here? So you have to look at price and look at the pivot points here. When you see an overall uptrend, overall downtrend, when you see lower lows, lower highs, lower low, lower highs, it's on a downtrend. The overall trend is on a downtrend. When you have a uptrend going on here, and then all of a sudden it changes direction to a downtrend and continues making these lower lows, lower highs, lower lows, it went from buys to sells. So that's how you notice the price changing direction. When it goes from higher highs to now lower lows, lower highs, lower lows, lower highs, and so forth. That's how you can tell the difference. When you have these lower lows, lower highs happening, it's telling you that is on a downtrend. And the more you practice this, the more you train your eyes looking at this, it'll become noticeable. Now, I'm not going to go over every single step. I will do that on the next call. But for today, we're looking at market direction. We're looking at where price is at. And I'll touch at the second step. I'll touch at support and resistance zones. So here, yeah. So now we got this. Let me go ahead and erase this so that we can look at price clearly. If you guys have any questions, feel free to drop it in the chat. For my people on YouTube. And let me see if there's any. Okay, we're good. So we have price here. This area you see here, it's a support. So we have a support demand zone. So now that we know we're on an uptrend, now we're going to go to the second step. Now we're going to look at the 1 hour. 1 hour support and resistance zones. SNR support and resistance. Support is your demand zone. Resistance is your supply zone. And you look at that, you look at support and resistance zones for potential areas of interest, to know where are the suppliers and the buyers, the sellers and the buyers, to indicate an area where an area of suppliers and people that are buyers. Hence, demands equals buys, supplies equal sell. Supply equals sell, demands equal buyers. Here we have an area of support. We have a demand, and it can correlate as well. Support can become a resistance. Resistance can become a support. So when you have an area where you have price action going on, price action basically means that there is a lot of price activity going on. So we have a lot of touches, a lot of wicks, a lot of activity going on here. So in this area, we have the price, right? We have a lot of price touches here, price activity. We have wicks, these big, uh, uh, you know, lengthy peaks are called the wicks, which indicates liquidity. There's liquidity going on where price used to be. So we have a lot of touches going on here, a lot of activity going on in this area. So that is why when you look at stuff like this, it's an area of interest. It's a potential demand and supply zone. In this case, we have to look where price is currently at. Price is here. And it may retest this area. It may come down to this area to touch it to continue the uptrend. Or it could break below this zone for a downtrend. But we're looking at the 1 hour here. On the 1 hour, we're focusing on where the demand zone is at, where the supply zone is at. So here we have a support zone. We have a support zone because it went from resistance to support. So it went from resistance, price rejecting this area. You see how it's not breaking above, but eventually it did. It went above, broke above, and retest to continue the uptrend. Now, and I'm going to talk more about that, okay? So as I go, I'll explain what all this means. You don't have to have it all figured out right now. So let's look at here. So with Euro USD being on an uptrend, I'm looking for buys. And knowing my area of interest is support, I'm going to wait for price to retest this area. I'm going to wait for price to come down to this demand zone to see if it respects this zone or it may break below. It may break below the zone to retest. Every time there's a break of structure, there's a break of the structure, it has to come back and retest. That is called break a structure and retest. And that is actually in step 4. So break of structure and retest. But we're not there yet. Okay. So I'm just going over right now the 1 hour support and resistance zones. This is my support and this is my resistance right here. Why is this a resistance? Because price did not break above this area here. Actually use this. Price did not break above this resistance area. So when price rejects this area and comes down, it's on a pullback. So right now it's on a temporary pullback or correction, just like it happened here, right? Price resisted, came back to retest, and then shot up again. This is all pattern recognition. Price resisted this area here, pulled back, a correction before an uptrend, before a continuation to the upside. And the more you study these candles, the more you study your eyes to recognize these patterns, you will understand that every time there's a resistance, price has to come back before the continuation. Resistance here, resistance here, resistance here. Price came back down. Price pulled back before the continuation to the upside. And that's what we're seeing here. So when you have a resistance zone, this is, and it goes back. This right here, it's a resistance supply area. Color it red. You can color it however you want it. I don't like to draw too many rectangles. I just stick with a couple or a couple of lines, to indicate price entries, or when I look at for market execution setups, I like to list the prices, and I go by every quarter. So you have 75 here, 50, 50, right? So I just round it up to the nearest whole number or the nearest quarter, and that's how I list my prices. But anyways, we'll talk more about that. So for the sake of time and explaining this, right now we're only looking for support and demand, support and resistance areas. So our support and resistance. Support, we know that our support is here because price went from resistance, broke above, to support. When you see resistance here, when you see resistance becoming support, that equals buy. Resistance becoming a support equals buy. Resistance becoming support, that equals buy. Why? Because it is on a buy momentum. Resistance became a support here, and it resulted a bullish candle, right? It resulted a bullish momentum here. Price respected this zone, this area here, to continue the uptrend, the buy momentum. It does not necessarily mean that you enter the buy right away, because you haven't completed the rest of the steps yet. So just because you see this does not indicate that, wow, I'm going to enter a buy here, since I know I'm expecting a continuation, or I'm expecting for price to respect this support area. No, that does not mean, it does not mean that you have to enter a buy right away just because you see this setup. Just because you recognize these patterns and how resistance becomes a support equals buy does not necessarily equal a buy execution. It just means that it's on a buy momentum and it touched a demand zone, meaning that there's a lot of buyers, but it does not necessarily mean that you have to enter a buy right away, because there's more steps that you have to implement. You haven't fully confirmed that buy or that sell. So let's say right now price is here and you're expecting for price to break through above this resistance, for this resistance to become a support, because we saw it here. At this time, it was resisting and then it broke above to support it. And we may see the same thing here. We might see it. Okay. We might see it. We might see price breaking above this area to continue the uptrend momentum. But that is why patience is key. Patience and staying disciplined with your trading plan is so key, because you don't want to rush into this. You don't want to rush into taking a market order or a market execution just because you are seeing this pattern going on. You have to wait until price comes back to retest again. And when price comes back to the zone, that's when you go to step 3 and you look for liquidity. You look for where the money is at. Where is the money? Liquidity equals money. Where is the money? So all this is money. All of this is liquidity, because we have buy orders, we have sell orders, we have buy, sell, buy, sell. So all this indicates money. It is all liquidity, because price can come down, or the banks, the institutions, the hedge funds can. And remember, all this is being controlled. It's all manipulation. At any moment, something can happen and can result a bearish candle, a high volume, a high order, a high sell order, and can wipe out all of these people, all these retail traders, right? It can take out all this money at any time. Just like how it happened here. You see here, this long wick, that is because of the central banks, right? The institutional traders, the market manipulators. This candle, this resulted a liquidity sweep. So a liquidity sweep is basically, we had people selling here, setting up these sell orders and these stop losses. They had their stop losses set up, their pending orders, their sell orders, right? There was money here. We had money here. Let me see. This was all money, because we have stop orders. We had stop orders. We had stop losses. We had sell orders, and then price came down to retest, and then all of a sudden you see this huge candle with this huge wick to liquidate, to take out all these people. So you have situations happening like this at any time. This is something that we cannot control. What we can control, however, is how we follow our trading plan, how we are disciplined, our behavior, our attitude. That's what we have control. We don't have control what happens in the markets, because this can happen at any time. When you have a wick of this size, and this is over 90 pips. So this can happen at any time. So be mindful and be careful when you see this happening. You do not want to trade when there's news happening or when there's something happening in the economy, and right now when news we had existing home sales came out to 3.93 million. So this is a orange folder. So it happened at 7 a.m. Arizona time. So this morning we had existing home sales. This is from the National Association of Realtors. It's a leading indicator of economic health because a sell-home triggers a wide-reaching ripple effect. For example, renovations are done by the new owners and mortgages sold by the financing bank. So you can look at forexfactory.com for any news because you don't want to trade during news. You don't want to trade. You want to keep in mind of what's happening every morning or every day. Keep watch of news because when you trade during news, there's more risk involved. So here, last Wednesday, I'm pretty sure there was news. Last Wednesday at 8 a.m. Arizona time, there were news. And it resulted in this bullish candle with a high wick. And we can look at So PPI was last Wednesday. So last Wednesday, we had a red folder, which is high impact news, which resulted in this candle. So the result, the impact of every news event occurs right after, an hour after, 30 minutes after, an hour after. So let's say this news happened at 5:30. This news happened at 5:30 a.m., which is right here. And we'll talk more about news. That's a conversation for another call. But 5 a.m. was here. News happened, PPI happened at 5 a.m. right here. This bearish candle. And it happened at 5 a.m. And then 3 hours later, no, I'm sorry, 1, 2, 3, 3 hours later at 8 a.m. resulted this bullish candle with this liquidity sweep. So the impact of every news, the result of it can happen right after in the markets. When we look at the markets, because they release the news, they release the data, the information. Let's say here in this case at 5:30, they release information. They release the information, the numbers at 5:30. But the impact, the effect on the markets, when you look at here, what happened an hour after, an hour, 2 hours after, 3 hours after the news event. So keep that in mind. And that's a conversation for another day. So, but yeah, I just wanted to explain this because in this case, it happened. You have this liquidity sweep happening, and the same thing can happen here at any moment. So that's why you want to wait until you have that full break of structure or that retest. So when you have a break of structure here above this zone to retest, every time there's a break of structure, it has to come back to retest. There has to be a pullback back to the zone of interest. So I'm waiting for either for price to come back down to this zone to respect and to retest for the continuation of the buy, or to break above this resistance zone for the retest for the continuation to the upside. So there's many probabilities, and this is a game of probabilities. You have to gather as much data, as much information before entering a buy or a sell order. And We will talk more about this as we go along. So you have your resistance and your support, your 1 hour resistance and your 1 hour support. And this is a resistance because we have price action going on here. So we have a lot of touches here. It's an area of interest. And we had a resistance here, a resistance here. Price did not break above this area. It resisted to break above. It resisted here to break above. So every time there's a resistance, like price is having a hard time to break above the price, and instead it rejects, it comes back down. That is a resistance, a supply zone. There are suppliers, there are sellers that are driving price down. When you have a demand zone like this, you have buyers that are pushing price up. You have buyers that are pushing price up. And that results a demand buy area. So when you have resistance becoming a support, it indicates a demand area. So think of it as your ceiling and your floor. So your ceiling is your supply area, your resistance area. And then your floor is your support. So let's say a good example is when you're living in an apartment complex, when you're on the second floor and you have the third floor and you have the first floor, right? So to get to the third floor, your ceiling on the second floor, your ceiling is the neighbor upstairs. Your ceiling, it's his floor. Does that make sense? So you have the ceiling and you have the floor. Your ceiling, which is the resistance, can also be a floor because your upstairs neighbor, that's his support, that's his floor. And you want to break through that ceiling, right? You want to break through to go to the third floor. So that's what's happening here. And right now price is trying to break above the ceiling, the ceiling to get to the third floor, to now to have his ceiling become a floor, a support. I hope that's making sense. So I'm doing my best to explain it. So you're on the second floor and you're trying to get to the third floor, and in order to get to the third floor, you have to break through that ceiling, your ceiling, which is your resistance, to get to the third floor. And now your ceiling becomes a floor because now you're on the third floor. Now it's a support. So that ceiling becomes a floor. That supply would become a support. That resistance becomes a support, and vice versa. So, and your floor, you're on the second floor, and your floor is your downstairs neighbor on the first floor, his ceiling. So this is you right here. You're on the third floor here. This is your support to sustain you on that second floor. But your downstairs neighbor on the first floor, your floor is his ceiling. So your floor, your support is your downstairs neighbor ceiling, his resistance. So your neighbor downstairs on the first floor, he wants to get to the second floor. His resistance, his ceiling has to break through to get to the second floor for his ceiling to become a support. To break above to get to the second floor, and now his ceiling will now become a support for the continuation to the buy. Boom. So that's the best way to explain it. Your ceiling here in this case is your resistance. Okay. Here you're on the second, you're trying to break through you're trying to break above your ceiling. You're trying to break through so that way you can get to the next level, get to the next floor, and your ceiling will now become a support. And now this won't, and once it does that, after that break above structure and a retest, now this supply will now become a support. My gray areas are support areas, and then you can color it red for resistance or supply. So you can, right now is a red, right? Right now it hasn't broken above yet. So right now it's still resisting that area. It's still resisting this area. This is it's a support. This is my resistance. And once it breaks above this resistance in the retest and respects it, then this will now become a support, not a supply zone anymore. It becomes a demand zone. Now your resistance becomes a support, and you can change colors. So it's been over an hour now. This is just a quick uh, way to explain it. And then the more every week I'll be posting more, and every week I'll be talking more about this. Since today is the first day of Chart Work Wednesdays. Take all this, keep this in mind, and have these steps written down, because I will continue to go over this. I will, if I got to repeat myself, I'll do it, because it's all about repetition. It's all about repetition of information. So that way it can now become a habit, right? You can change those thought patterns, because that's what, that's literally all I've been doing is continuous study, continuous repetition of this skill of applying these steps of learning how price moves, support resistance, break of structure, market direction. It's all repetition. And today we covered step 1, step 2, a little bit of step 4, uh, step 3, liquidity, break of structure. And next week I will cover more about liquidity and support and resistance zones, break of structure, and then the rest of the steps, confirmation candles. So every time I do my analysis, I'll be going over the playbook. I'll be going over the playbook. So do not feel overwhelmed, or do not feel like, oh, I got it all figured out. Do not feel like, you got it all figured out, or do not feel overwhelmed, because it takes time to learn this. And I don't expect you guys to get it all down. That's why that's why I'm doing these calls every week. It's all about consistency. It's all about repetition, and just give yourself time, give yourself grace, that at least you guys showed up today. At least you guys showed up, and that's all that matters. It's all about just showing up and just putting in the work, and and uh and continue to study this, because trust me, one day it's all going to make sense. It's all going to make sense. And I'll do my best to show up. I'll do my best to explain it at the most simple, fundamental level, because I know I'm going to have a lot of people that are beginners, intermediates, and you know, just give yourself time, and continue to come back to this channel. Continue to come back and rewatch these videos, and get on my live, and it's all going to make sense. It's all going to work out. So I do appreciate you guys for hopping on. I appreciate you guys for the support. Spread the word, like and subscribe. And because I will be dropping some major gems, I'll be showing you guys the way. and making trading great again. Making trading great again, because there's a lot of information out there, a lot of misconceptions about trading, and let's make trading learnable, and anybody can learn the skill. Anybody can learn the skill. Your grandpa can learn the skill, right? Like, I've seen kids trading. Like, anybody, doesn't matter what age, what background you come from, does not matter. Anybody can learn the skill, and it's a powerful skill set to have. Um, it's be a master at it, be a professional at it, and really study and take this seriously, because it can change your life, just like it changed my life. And I may not be the best teacher, I may not be the best speaker, I may not be the best trader, because I'm learning to this day. Um, because there's so many people out there, so many traders and people that you can learn from. But I keep it very transparent. I keep it very transparent, and I want to show you guys what has helped me and what's working for me. I'm open to share it, and I may not be the best speaker, or the best, you know way of explaining things. So bear with me, and give me some grace, because it's been a while, and I'm relaunching this, and I'm doing my best to guide you guys and explain it. Um, because the more I do it, the more I explain it, I learn. I'm getting better. So, and of course, it's going to take time. So, trust the process, and that is why I came up with this strategy. This playbook, the 7 steps, because it's very simple to understand. It's very simple. However, it's not easy, but it's simple. It is simple principles, simple rules to follow. And once you get it, it makes sense. Like, it starts to you start to see progress. You start to see it, and it just makes sense. And it's a clicking moment. So you all have that aha moment. It's all gonna make sense. And I can't wait for you guys to experience that, because I've been through that many times. Like, I've been through those moments of breakthrough moments. I've been in those moments where it just clicks. Like, man, like, you start to see the patterns. You start to see the way the price moves, and how it respects these areas. And does not matter what trading pair, does not matter what asset pair. Like, oh, I'm trading US 30, I'm trading S&P 500, I'm trading futures, I'm trading all these, you know, big asset pairs. Like, it does not, like, you don't have to trade these pairs to become successful at trading. Like, you don't have to be a master at US 30, or a master at S&P. Like, just stick with one asset pair, just stick with one, and apply these steps. It will change everything for you, especially for gold. Like, for me, it was gold. Like, that was the first pair to apply these steps. I applied these steps with gold, and I will show it. I will show you guys, on the other calls, to apply the playbook, to apply these steps on gold. It works amazing, especially with gold. So I'm gonna dive into that more. Today was Euro USD, because Forex is simple to trade. It's you get a good price momentum, good price direction. You get to uh, point out the higher lows and higher highs a lot simpler, a lot easier. Noticing the support and resistance area a lot simpler with Forex pairs. You can also do that with gold. Gold, I love gold because it respects price so well, and it's volatile, yes, but like, you can just notice it. Like, and I'll share that on another call. Applying it with gold, and it's a game changer. And but like I said, it does not matter what forex pair, what asset pair you trade. It does not matter what market you trade. You can apply these same principles and it works. It works. It just takes time and study and repetition. So continue hopping on these calls, and thank you guys for tuning in, for watching, and for today, Chart Work Wednesday, Chart with Carlos. So continue to plug in. I appreciate you guys. I love you guys. I'll see you guys on the next call. God bless.